There are still pockets of hope, however, with some companies looking to expand despite the market conditions. The crypto and tech industry has seen a slew of staff cuts this week against a backdrop of difficult market conditions, though on a positive note, some are bucking the trend. Crypto companies, including crypto exchanges, venture capital firms, and blockchain developers, have been forced to reduce headcount in order to stay nimble amid the bear market. Some, however, have done the opposite, opening up offices in new locations and markets. It comes a few weeks after multiple high-level executives, such as OpenSea's former chief financial officer, Kraken's co-founder Jesse Powell, and Ripple Labs' engineering director, have all made headlines for either exiting or stepping down from their roles in the space. Stripe cuts around 1,000 staff. Patrick Collison, CEO of payments processor Stripe, said in a November 3 memo that 14% of the firm's staff, around 1,000 employees, would be laid off, citing inflation, energy costs, higher interest rates, reduced investment budgets, and sparser startup funding as reasons for the cuts. Collison added it overhired for the world we're in, saying Stripe was too optimistic about short-term e-commerce growth, underestimating the impact of a wider market downturn, and that its operating costs grew too quickly. The memo says the headcount changes will be uneven across Stripe, and it's unclear what departments will be affected or how it will affect the crypto side of its business. The payment startup released a crypto payouts product in April for Twitter creators. Dapper Labs cuts 22% of headcount. Flow blockchain developer Dapper Labs made the decision on November 2 to cut 22% of its headcount, impacting roughly 130 employees in a memo by founder and CEO Roam Garagosla. Garagosla said the macroeconomic environment and the company's growth from 100 to over 600 employees in less than 2 years prevented the firm from being as aligned, nimble, and community-driven as we need to be. He said Dapper Labs streamlined and focused its product strategy around a more sustainable cost structure and looked at the skills it needed for the future when deciding who to lay off. Digital Currency Group lays off 10% of staff, report. Web3 conglomerate and venture capital firm Digital Currency Group, DCG, let go of around 10% of its workforce, according to a November 1 Bloomberg report that saw 10 employees exit the company, bringing its headcount to a total of 66. The cuts were reportedly part of a restructuring, with Mark Murphy, DCG's chief operating officer, also promoted to president. A spokesperson said DCG made a series of internal changes to position the company for its next phase of growth that included streamlining of departments. Cointelegraph contacted DCG to confirm the report but did not receive a response. Galaxy Digital reportedly eyeing 20% workforce drawdown. Galaxy Digital, the crypto firm founded by Michael Novogratz, is also looking at a potential staff cut of around 20%, as much as 75 positions, as per a November 1 Bloomberg report that cited sources familiar with the matter. The company neither confirmed nor denied the rumors, with a spokesperson only saying the firm is considering optimal team structure and strategy. Yahoo Finance data shows shares of Galaxy Digital are down around 76% year to date, alongside a similar drawdown in crypto prices. Galaxy Digital was contacted by Cointelegraph to verify the report but did not receive a response. BitMEX makes staff cuts amid strategy pivot. Crypto exchange BitMEX is also making drawdowns across its employees in conjunction with a strategy to pivot away from spot trading and custody services and instead refocus on crypto derivatives. A BitMEX spokesperson told Cointelegraph on November 1 that an earlier report citing 30% of staff would be cut was inaccurate and too high, but with its focus back on derivatives trading, an undesirable consequence was that we had to make changes to our workforce. Coinbase CPO quits to take a breather. The now former chief product officer for crypto exchange Coinbase, Surojit Chatterjee, in a November 3 LinkedIn post revealed he had left his position at the company, saying, "It's time to get off the ride and catch my breath." Chatterjee's stint at Coinbase lasted 3 years, but said he'd continue to help the company by serving as an advisor to its CEO Brian Armstrong. He said the personal break comes to spend more family time after his father was diagnosed with Alzheimer's disease and his mother unexpectedly passed away. An October 28 Securities and Exchange Commission (SEC) filing by Coinbase says with Chatterjee's departure, its product, engineering, and design teams are being reorganized within a product group structure under which the leaders of such groups will assume responsibility for Coinbase product offerings. OKX opens in the Bahamas, plans to hire 100 locals. Meanwhile, crypto exchange OKX appears to be looking to scoop up staff and said on November 3rd it plans to fill 100 job openings. The open positions will only be available to Bahamian local talent as OKX registered as a digital asset business in the Bahamas, forming a new subsidiary to serve as the company's regional hub and opening an office in the archipelagic nation's capital city Nassau. Paxos adding 130 heads in Singapore. At least 130 new hires based in Singapore will be added over the next 3 years at blockchain infrastructure firm Paxos, according to a November 2 Bloomberg report, after its local unit received a license to offer digital token payment services. Paxos co-founder Rich Teo said up to 180 might be brought in over the 3 years, which would boost its headcount to around 200, a 9 times increase from its current team of 20 in the city-state. In October, $4.5 trillion asset management firm Fidelity Investments told Cointelegraph it is set to hire another 100 people to bolster the firm's growing digital assets division. Fidelity, in a statement to Cointelegraph, said that the firm was in a unique position to offer exposure to the emerging digital asset sector as its reasons for pushing for more talent to bolster its digital assets arm.